let's also focus in on Epigral. The company has reported a decent performance in the fourth quarter with very strong revenue growth led by derivative products. The board additionally has approved capex of 780 crores for doubling its CPVC resin and EHC capacity. The company's chairman and MD Maulik Patel joins us now. Good afternoon to you, Maulik. Thank you so much for joining in with us. Let me first start off by asking, 32% year-on-year growth in the revenue. You've also posted 11% year-on-year growth in the volume. So largely, when we look at the growth, was it largely led by pricing or was it a change of mix? And going into FY26, what are your expectations?
So mainly the growth in this financial year, last financial year, it was because of the CPVC and ECH expansion, what we did 2 years back. So this was the full year where we utilized maximum capacity of the CPVC, what we have expanded last year, and CPVC compound of last year. And ECH, which we have commissioned in 2 years back, I think it was the full optimum level we have utilized in the last financial year. So major capex, what we did in last 2 years, I think because of the volume, this growth is coming to the company.
Okay. Mr. Patel, also give us a sense, we want to talk specifically about the derivatives as well as the specialty segment. Right. FY25, what was the contribution? We understand by FY28, you expect this contribution from this particular segment to increase quite significantly. In the call yesterday, I think you've given a volume guidance in the range of 15% and EBITDA margin guidance in the range of 25%. If you could reiterate that guidance for us, and where do you see growth triggers in FY26?
So if you see last 3 to 4 years, we are continuously expanding on the derivatives and specialty side compared to our chloroalkali side, our expansion. So continuously we are doing it, and the volume is increasing is on the derivatives and specialty side, including the CPVC, epichlorohydrin, hydrogen peroxide, and the chloromethane. Now the future capex which we have announced is also on the CPVC and the ECH side, which will commission in the first half of next financial year. And that will add on our right now our market share is not market share, but the percentage which we are getting a revenue from the specialty and derivative side in this financial year, we have reached up to the 55%, 54% from the derivative side, which will increase further down the line after 2 years. Once we reach the optimum level of CPVC and ECH expansion capacity, it will reach to 70%. So our ultimately revenue mix will be 30% from the chloroalkali and the 70% will be on the derivatives and the specialty chemical side will be there in the future.
Sure. And, generally the margins on the derivatives and specialty business, that is better than your other segment. So what would be your margin outlook going forward? Right now your margins have actually improved to 28% or so. So going forward, when your mix also moves towards the derivative side, what is the kind of margin you're expecting?
So as a company as a whole, we are giving a revenue guidance in terms of the EBITDA margin. We are giving almost it is going to be around 25% plus or minus 2%. It is going to be there going forward as well.
Okay. So 18 to, sorry, could you come again with that number?
It's a 25% plus or minus EBITDA margin will.
EBITDA. So you expect EBITDA margins to moderate despite the rising contribution from the derivative segment. Is that accurate?
Yeah, that's right. Because, last couple of years, the chemical market globally was on the downward. So the feedstock cost, the feedstock raw material cost was on the lowest side. That's why we are having a little higher percentage of margin. But going forward, I think we are expecting the rise, the price of the raw material will increase. So that's why we are giving a guidance in the long term. We are giving guidance of 25% EBITDA margin only.
Sure. And, you've also announced a capex, 780 odd crores, that is expected to start contributing from FY27 onwards. So you just give us an idea, what would be the kind of incremental revenues that will come on stream once this capex is commissioned? What is the kind of, demand that you're seeing to support the kind of capex that you're undertaking?
So over and above the CPVC and ECH, what we are expanding in current financial year, we have also commissioned the chlorotoluene and chlorotoluene, which is also import substitute and first time in India. And so we are expecting we are going to achieve the revenue from all these 3 projects: chlorotoluene, ECH expansion, and the chlorotoluene, the CPVC expansion. We will get an expected revenue around close to 1,200 crore kind of thing once it reach to optimum level in coming times.
Understood that. Maulik, also give us a sense. We understand that in the quarter gone by in FY25, caustic soda actually was quite volatile, but Q4 you ended caustic soda business on a strong note. FY26, how do you see pricing pan out? What is the current capacity utilization? Do you feel the need to expand facilities over here?
So the caustic soda side, it is a strong demand globally because of the alumina and the nickel, which is used. Nickel derivatives also used in the EVs and in the electronic application. So both the metal is going to remain strong, and the major consumption is caustic soda. So caustic soda, we are hoping in the current financial year, even in the next financial year, it is going to remain strong. Only the chlorine derivatives is on the downward side. That's why the chlorine expansion, we are continuously doing in-house consumption going forward. So once we expand all CPVC, ECH and everything, our 90% chlorine consumption will happen in-house internally. That's why we are able to ramp up our efficiency of the chloroalkali production close to 85 to 90%, what we are right now at 80% or 75 to 80%.
Sure. And, what is the mix between the domestic revenue as well as the exports? And is US a significant part of your exports?
So currently we are exporting majority on the European side. Currently we are exporting to only 10% of the company's revenue. We are more focused on the domestic growth, which is more on the infrastructure, windmill, the renewable energy and the automotive sector side. And that's why we are adding the chemistry, or we are doing expansion which use in this 3 segment currently. And long term, we are very bullish on the domestic side rather than the export side. But yeah, there is an opportunity, but I think clarity of the US on the tariff is not yet come. We cannot take a long-term call based on the current situation, because many people are expecting that it will change frequently after the negotiation with the individual countries going forward. So currently we are not able to take a call based on the US, but yeah, of course, there is opportunity in the US in many chemical sectors right now, including what we are manufacturing right now. But I think it is difficult to comment on the long-term strategy about the US market right now.
Maulik, one last question. Request you to keep your answer a little short. Well, that's an evolving situation and we are all tracking it. Well, you spoke about capex for doubling, both CPVC and ECH capabilities. FY26, can you confirm if the capex required is close to 450 crore? So how are you funding this capex? What does it do to your debt? You've also given a guidance for reducing debt to EBITDA. So give us those numbers, please.
Yeah, so currently we are going to manage all the capex. What we are planning to do in current financial year is mainly from the internal accruals, and if we require for the short term, we will raise from debt from the bank. But mostly it is going to be from the internal accruals only.
Sure, got that. Well, thank you so much, Mr. Patel, for joining in with us. We hope to connect with you sometime later again. But as we slip into a very short break, here is some good news for our viewers. India's business news leader is only a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.